Hello, Massachusetts Association of Realtors Directors. I'm Ann Meswar, your 2017 Secretary-Treasurer. I'd like to take a few minutes to give you this overview of MAR's financial statements. I hope this will help prepare you for the next set of MAR caucuses and the upcoming Board of Directors meeting. The email with the link, which directed you to this video, contains the actual financial statements. I am always mindful that while we are all business people, most of us are not financial professionals by trade, so financial statements may be somewhat out of your comfort zone. However, as directors, it's our responsibility to stay on top of the use of members' dues dollars and MAR's asset management. Please take time to review these documents before our caucuses. This short video won't cover everything, but I'll point out some of the main items. Please note that I will be using rounded figures in my presentations, but the reports you have contain actual figures. Before each caucus, you receive statements for each month of the previous period, but we will highlight only the preliminary year-end for 2016 and most recent month, which for financial reporting purposes is February 2017. All financial statements have been reviewed by our Finance and Executive Committees. We will first look at the 2016 preliminary year-end financials, which will be in the audit report to be approved at the April 27th Board of Directors meeting. We'll start with the balance sheet, the consolidated statement of financial position. The first column shows MAR's unrestricted assets and liabilities. These are the bulk of the association's activities as a 501c6 business association. The unrestricted column as of December 31st, 2016 shows that we have short-term investments of $6,533,000 and total current assets of $7,138,000. On the liabilities and equity, we received $546,000 in advance dues. This represents all of the 2017 dues received by MAR but not yet recognized as earned income. Total current liabilities is $942,000. Our membership equity for the period is $6,208,000. Our current year net gain is $280,000. In the Private Property Protection Fund, which is abbreviated as PPPF, we show short-term investments of $2,206,000. Total liabilities and equity are $2,240,000, and total current year net gain is $40,000. The Charitable Foundation, which is our 501c3 entity, shows total assets of $95,000, and current year net gain is $7,000. Our final item on the balance sheet is RPAC, the Realtor Political Action Committee. It shows only cash, since investments are prohibited. That figure is $227,000. Current year net gain is $54,000. Our next financial report is the Profit and Loss Variance Report. This is a hybrid of both the full profit and loss statement and the variance report. I'll use this to provide you with a bit more detail for 2016. I will begin with the key variances in association management. Dues had a positive variance, meaning more than we planned on, of $95,000. As of the end of December, we received payment for 22,478 full-year equivalent members, ending the year 628 full-year equivalents ahead of budget. Please note that we ended the year with an actual membership count of 23,522. Investment revenue had a positive variance of $13,000. Remember that some investments pay more dividends in December. Compensation, taxes, and benefits have a negative variance of $13,000. This is a result of an unplanned increase in employee benefits costs. Miscellaneous expense has a negative variance of $27,300. We had to pay additional fees because more dues payments were made directly through NAR e-commerce. This also includes $22,815 donated to the MAR Charitable Foundation as approved by the December 2016 Board of Directors vote. Overall, association management had a total net positive variance of $59,700. Government Affairs had a total net positive variance of $6,500. Under Communications and Technology, Member Marketing had a $55,900 positive variance, reflecting the committee's decision not to spend much of the money earmarked for Gen Y recruitment. Overall, there was a total net positive variance of $73,500. In Professional Development and Education, the convention had a positive variance of $45,100. We had increased attendance, more booth space, and higher pricing. The total net positive variance for professional development and education was $73,400. Finally, under Local Association Volunteer Support, the installation had a net negative variance of $35,500 due to the fact it was held at a venue and not at a hotel. This resulted in an increased AV and catering cost. There was a total net negative variance of $39,400. The last financial report is our investment report. Doug Azarian, chair of the MAR Investment Committee, will provide the bulk of the report at the BOD meeting, so I will just point out this page, which is our year-to-date summary. In it, you'll see that in the MAR general account, we have a net investment gain of $149,000 for the year. Our ending value is $4,764,000. This includes $2,185,000 in proceeds from when we sold the MAR building. Now that we've summarized 2016, I'll recap the financial statements as of February 28, 2017. Let's take a look at the balance sheet. Under the unrestricted column for February 2017, key items include short-term investments of $6,637,000, total current assets of $7,185,000. On the liabilities and equity side, we've received $420,000 in net dues, which represent dues received to date but not yet recognized as earned income. Total current liabilities are $831,800. So our membership equity for the period is $6,363,000, including our current year net gain of $154,900. The Private Property Protection Fund shows short-term investments of $2,263,000. The total PPPF liabilities and equity is $2,293,000. Current year net gain is $87,200. The Charitable Foundation shows total assets as of February 28th of $94,800. Current year net gain is $76. Finally, the RPAC total cash is $250,200 with a current year net gain of $30,100. Please take time to carefully look over the Statement of Activities, the Profit and Loss Statement. Again, this is the report with which directors should be most familiar. As before, I'll use the hybrid of both the full P&L and the variance report to give you a good picture of where we stand as of February 28th of this year. Because it is early in the year, you will see many of these figures even out in subsequent reports as the year goes on. Let's take a look at the key variances. For Association Management, compensation, benefits, and taxes have a positive variance of $16,000, reflecting one vacant position in January and February. Association Management total net has a positive variance of $6,900. Government Affairs also has a total net positive variance of $4,200. Under Communications and Technology, total net for Communications and Technology has a positive variance of $6,800. Professional Development and Education has a total net positive variance of $2,600. Local Association Volunteer Support has a total net positive variance of $4,500. Our Leadership Symposium had a positive variance of $3,400. We saved on planned outside speaker fees, which accounted for this variance. In future finance videos, we will include investment reports, but they are issued quarterly, so there isn't one for 2017 at this point in time. I hope you found this summary helpful in preparation for the upcoming set of MAR caucuses and the Board of Directors meeting. We make these videos to try to provide information in an understandable and transparent way. If you have any questions, we want to address them fully. We don't want to delay an answer while we research data or figures, so please email questions to ann@ann.realtor. This will help give you better information, the information you want, at the caucuses. I look forward to seeing you then. Thank you for taking time to watch this video.